once again, I want to welcome you to our other session of the training, and still I would take this time to tell you I'm Titus, and now we are going to look at record keeping as one of the modules for the training. Basically, for the trainer, you don't actually, you let the participants know what record keeping is. Because here the objective actually for this session is to make participants aware of the importance of keeping records of sales and expenditure, and then profits, of course, and losses in their small businesses. But when you start the session, it's very important that you let the participants discuss within themselves what record keeping actually means. I mean, many of them are keeping actually records, but at some points they are not aware of how important it is. Not until they try to find some information that actually they can't even get at that particular moment that most probably they need it, that they actually realize how important it is to keep records. However, we are going to spend much of our time concentrating on the records that are basically involved into their day-to-day transactions of their businesses. So after having the participants define for you what record keeping is, and of course, you make a note of what they are, of what their definitions are in their local languages. And of course, when you're introducing the topic, it's record keeping in English, but still you translate it into your local language, so they actually have an idea of what's going on and probably how they can define it. So after they've gotten the definition, after they've defined it, then and you've made a note on the flip chart, you arrange them into groups. Let's say if there are 15, you can make maybe 3 groups of 5, and then you give them about maybe 10 minutes or 5 minutes, depending on how long you think it will take them to go through this activity. So during that time, in their small groups, they are actually discussing how they keep records by themselves. Now, of course, you hope them to find someone who is going to be putting down the ideas, and then the person who actually is going to make presentation, because at least at the end, each group has to make a presentation of how they actually keep records for their small businesses. So now, after they have discussed within themselves how they keep records, you now give them a chance to write those ideas on flip charts. That means every group will have to write their ideas on a flip chart. And then you give an opportunity to the presenter, selected, of course, from the group, to come and make a presentation of how they think they keep their records. Now, in most cases, what you're going to find out is the confusion of transactions, like sales, profits, losses. In most cases, they don't know what goes where, and then you actually take that as a strength for you to now help them arrange, put the items or the transactions where they're actually supposed to be. But after having them share with you what they think and how they keep their records in their small businesses. Now, after each group has made a presentation of the ideas they actually put together about how they keep records in their businesses, then that is the time when you actually come in, because it has been their time. Now it's you to put things right. Just like we said before, many of them are going to confuse items that probably would be on the income side, and then items that will be on the expenditure side. So they probably might not even be aware of how to get a profit or loss or something like that. So now what happens, you draw a table on the flip chart. This is really a small thing that we will like see, but of course that table has to have like a date, description of the item, then in, out, and balance. Now, some of these things, let's say date, we know the nature of our clients, of the participants. Some of them have never been to school. They probably don't even know how to write, but they know how the sun looks like. So they can draw anything that to them can actually mean the date, other than writing the word in English. They can decide to draw a sun to mean the date, or they can draw anything of their choice that they really think, if they look at it, they actually know this is date or stuff like that. And then description, if let's say it's about a transaction that was made for Matoke for bananas, then they have an idea of what bananas look like. So that means they are going to draw bananas. If it was let's say from sales and they sold maybe 3 bananas, that means they might need to draw their like 3 bananas. You know, anything that can make them understand that this transaction was actually made specifically for bananas. And then income in, of course, money is coming to the business. So there sometimes maybe if they don't know how to write in, but they know how to write the plus sign, an addition sign. So then an addition sign means something is getting added onto something. So like money is actually coming into the business. And then out, you have money going over the business. So there they can use the minus sign, because of course money is going out of the business. Then balance, it's an equal sign, and then you cross it. But of course they really need to use some of the pictures that can help them understand based their transactions and stuff like that. Because what you're going to find out is that, just like we said before, most of these women are somehow keeping records, and you don't have to enforce the proper way of keeping business records. Otherwise they will get bored and stuff will be really complex for them, and they may not really understand. So it's important that they actually generate ideas of how they can keep records, and then for you to help them understand where to put items that go on the income side and then items that go on the expenditure side. So then of course you can have, just like we said before, you can have another table for income, a specific table for income, and then another table for expenditure. So start. The table for income, for the money that comes to the business, is separate. And then the money that goes out of the business, that has a record of transactions that are being made, and those transactions are actually having money go out of the business, can be separate. Because then it will be very easy for them to know how much for the income, how much total they have on the income table, and then how much expenditure or expenses they have on the expenditure table. It will be very easy for them to get the total here and then subtract it from the expenditure to know how much their ending balance is. But of course, like during the training, you help them understand the definitions of sales, income, profits, expenditure, and all those other things that we use while keeping our records in businesses. So that is really, really very, very important that you actually let them know. You let them generate ideas of how best they can keep their own records, other than you enforcing what you actually think is right to them. And just like we said before, it's also important for them, for you, the trainer, because purely sometimes it's hard to run a business without giving a credit. Sometimes you have this reliable customer, and for some time this guy comes, and honestly, at that point, they don't have enough money to buy whatever they need. And because you've there is that kind of trust that does exist between you and your customer, there's a possibility that you might give out a loan. But if you, something on credit, but if you give an item on credit, still you have to draw another table. Now that table will have the name of the creditor, the address, and then the credit limit. You have to know in your business, participants have to know in their businesses, how much amount can they not give out of the business as credit. At least they have to have a limit. Otherwise, if they keep on giving out money and items on credit, there's a possibility that the creditors may not pay on time, and they may not even, and that the implication is that the one who is running the small business may not even have enough money to go and buy more supplies for the business. So the participants have to know the date on which they actually gave out the credit, and then you can read the details of the credit, like what items were taken on credit, and then the credit amount, like how much. We said it's date, details, credit amount, then amount paid, and then balance. Now, if a customer comes and pays some money, it's very important that you actually give them a receipt. The participants have to give their customers that have paid some money on their credit, to give them a receipt justifying the fact that yes, on this date they made some payment and therefore they're remaining with this balance. If a customer came and paid all the balance, then still you have to record that, such that sometime in the future you may not get confused by asking again this customer, like, hey, you went with my date, and because the thing is, if you don't have records, such occurrences might happen, and you want really to avoid them because you don't want to break that trust that is between you and your customer. So that is really very important that we know the date, details, credit amount paid, the balance, and then the signature for the creditor and the person who gave who is operating the business. So for this particular case, we have some visuals to show to the participants. For example, you have this lady. She's running a small business. She's selling food. As you can see, she's washing utensils, and then she's boiling up some stuff. And then some customers are coming, like, to come and eat food or stuff like that. So then this woman is wondering, like, here comes Makopo again. He's been eating food without paying, and I don't know how much he owes me now. You see? She doesn't even know. But what implication? You ask the customers, the participants, what implication can this have on our businesses if we really don't keep records for the person that we give credit? They may take us for advantage, and at the end of the day, even the business may collapse. And remember, we said we want to run successful businesses. So and then we have this visual where you have this customer. They have been served with food, and then this lady is like, Makopo, do you know that you owe me money, 1,000 shillings now? Then this guy stands up on the table and is like, no. So far it's only 700 altogether. Now see, there is confusion. The other one is saying 1,000. Now the other one is saying 700. Now chances are that maybe for some reason is this woman actually still remembers that the amount was 1,000 that she actually gave out on credit to this guy. But because this guy is aware that this woman did not keep any records, then he wants to take advantage. So you actually stress the fact that it's really, really very, very much important that we keep records if we want to know our expenditures on sales and on sales, profit, income, and all those other things. And then it's also important that, of course, who you've given out, which item you've given out on credit to who and how much, and then how much is the balance, maybe if they actually made any payments. Thanks for watching.